December quarter wage price index has just been released by the Bureau of Stats. Let's bring in business reporter Ed Boyd. Ed, what's the number? What is it saying about wages, real wage growth, if there is any, and what are the implications for interest rates?
Well, there is no real wage growth according to the latest stats from the ABS because wages have come in below the level of annual inflation during calendar year 2025. So these are really important numbers. They come out every quarter. The wage price index, you can see the expectation was we were going to see an increase of 0.8% in the December quarter and a 3.4% rate at an annualised rate. And that's exactly what we've seen come out in the numbers today. So as expected, wages have basically remained steady. It's the same figures that we saw in the September quarter. Now they've been repeated in the December quarter. So wages have not accelerated any further on a quarterly or annualised basis. But we can show you some of the inflation numbers for last year, where you can see here the consumer price index, essentially inflation. We've got two figures we can look at. The quarterly number on the left, inflation increased 3.6%. The monthly number on the right, we get both of these stats now, it increased 3.8%. So you can see wages being 3.4%, you are looking at wages in real terms are going backwards. So there is a disconnect there between wage price growth and consumer price growth. And we know the Reserve Bank's already lifted rates once. They're worried about inflation getting up to about 4.1%. In their recent statement of monetary policy released just a couple of weeks ago when they lifted rates, they had their modelling economic assumptions looking forward to 2027, and it basically showed that wages are going to be below inflation now, heading out until June 2027. So in other words, real wages will be going backwards for the next year until June 2027. So these are important numbers that came out today. Just having a quick look at some of the key categories that received the biggest pay rises. Public sector wages were slightly ahead of private sector over that 12-month period. Healthcare workers got the biggest pay rise out of all the groups, followed by people that work in the electricity sector, followed by miners as well. So those were the three key job categories which received the biggest pay rises around the 4% mark, slightly above the average, which was 3.4%, Kieran.
Ed, one of the big contributors to inflation has been rising insurance premiums. I think many of our viewers would see that clearly in their bills. Health insurers, Medibank and NIB soaring on the market today.
Yeah, they're lifting really strongly on the stock market today after the Health Minister, Mark Butler, yesterday announced those new increases to health insurance premiums, which start on the 1st of April this year. He said it was going to be 4.41% increase on average for people with private health insurance. You can see the immediate stock market reaction to that news from Medibank up 5.6%. Their profit results are tomorrow. And NIB Holdings, they're up almost 4% off the back of that. And we've heard from both of those companies already saying they're going to be lifting their insurance premiums above that 4.4% level that the Health Minister announced yesterday. We quickly show you the ASX 200. It's been trading in positive territory. It got through 9,000 points earlier this morning. It's come down a little bit. It's at 8,999 at the moment. And the Aussie dollar, it's been strong, really gaining value over the past few months. It's hovering just below 71 US cents. So a good time to travel overseas because you get better value for the dollar right now in other countries.
Ed, thanks.